Boeing, B-A. Boeing Air Stuffs? What's the A? It's just Boeing Company. And this is a way, way more interesting one than just this stock chart shows because Boeing is the big company where they asked for a bailout and then they didn't need it. Very interesting. This is Brian Lewis with MMT Investing, and things just changed. So if we look at the graph, where are we, Fed? Yeah, okay. So here's what the S&P did. It did an A, B, C correction wave, and did a 1, 2, 3, 4, 5, a 5 impulse wave out, crash, and a bull trap looking thing, and now it looks like to be turning over here. And and Boeing hit the floor, was on the verge of bankruptcy, asked for a bailout, and the the Fed and the government were about to bail them out and offered them a bailout. And at the same time, the Fed was buying up corporate bonds. And just by the Fed increasing their balance sheet and buying up corporate bonds, that created enough liquidity in the private market for Boeing to go out and get private funding and avoid bankruptcy without a bailout. And that is way better for their company right now. But is it better for their stock right now? And is it good long term? Let's take a look at what's going on here. So Boeing always smashes that like button right now to help me out with the YouTube algorithm. And then what else are they doing now? So this is a pretty familiar looking stock with airline and some oil companies where they just dove. So they were sitting up here pretty flat in the mid 300s for quite a while. They didn't really get a bull market run. They're pretty flat. And then what did it go? 3 something to 100-ish. That's pretty bad. So that's a huge crash. And and Boeing, I would like to point out, like everyone's talking about Boeing and the commercial airliners, but they also make a lot of military planes. Like they make those helicopter looking planes that can do the vertical takeoffs, and they make, some war planes and some transport planes for the military and stuff like that. So this is a military and a uh, commercial airline building company, and they just down. Ugh. So fundamentally, part of their business should be okay with the military aircraft thing, and part of their business should be in trouble. So I mean, we looked at the GE stock not too long ago, yesterday I think afternoon, and GE had a bunch of contracts with Boeing. It was like 60 or 70 contracts that GE canceled with Boeing, and like this is what's happening with all of their commercial stuff is everyone's canceling. Nobody wants more commercial airliners. Warren Buffett is dumping all of his airline stocks because airlines look like a terrible value investment over the next several years. They're super expensive companies to maintain. And those companies that can't even keep, I mean, they're projected to have, the commercial airliners are projected to have max like 80% occupancy on their planes, not 100% plus bookings where they have to, offer people like a kick to the next flight or whatever they usually do, like 80% max occupancy and 100% airline maintenance costs and debt costs, which is really bad look for the profitability of the companies and the debt levels for all the airline companies. And they have no reason to be buying more airplanes from Boeing over the next several years. This is a really bad look for Boeing in the long term, and that's only half their company, but that's, or I don't know if it's half. I don't know what the percentage is. Um, so I mean, I was gonna look at their balance sheet and then I didn't because who cares? Like they're already asking for a bailout. Their balance sheet's terrible, but they didn't get a bailout. They were able to get enough private money to service their loans, so they're not going under this week. But the move that we have coming up here, and this is not investment advice, just the cyclical model that I have, we're in the middle of a credit contraction cycle right now, and we're a little over halfway through that cycle, it looks like. And it looks like the next move is going to be a down move. And this is going to be really bad for all the companies that have a lot of debt, including Boeing, who didn't take the bailout. Like, they're not out of troubled waters yet. And let's look at the height of this thing. So where's zero? I mean, I don't think Boeing's going to go out of business, but they're not. It's not like crude oil where it went down to like $1, like next to zero or something. I mean, they still have plenty of room to come down right now in this next credit contraction, and they're pretty tough to predict in the short term. People think this is a low value price, and I think that they might be mistaken. And I think this next downturn, there's a lot of stocks that look low like this and have room to come down, and this contraction is going to pull them down with everything else. So if you look at this cycle in the S&P, I mean, Boeing did all the moves that the S&P did. It did a dead cat, it did a bottom, it did the first part of the bull trap, and then the second part, and the third part. It has all the waves. It did the 5 wave. It just did it kind of dead down here, but you can see all of the moves and match what the S&P was doing, the double top, everything. So all of the charts, like all the sectors, all of the stocks follow these moves that the S&P is doing, and it's not the S&P making everything wiggle around. This is a contraction in the international monetary system, and as money is unavailable, stocks go down. It's directly related to the credit contraction cycle, and the credit is just how much loans are available to companies all across the whole world. And international companies have more exposure probably to the international banking system than, I mean, like these American companies can get a bailout directly from the Fed and that sort of thing. But that doesn't keep the contraction from affecting their stocks. And if we get a contraction down right now, it looks like they're moving down. And I mean, right now today on the S&P, we got a little run up, and you can see it right here. We got a run up and a turnover today on the S&P, and Boeing just stayed down. It didn't go up with everything else. So it looks like they stay down when the S&P is going up, and they go down more when the S&P goes down. So this just doesn't look like a good company to get involved in long term for me. And I still think there's downside, but I don't know how much. It doesn't look like a good company to short, because I would prefer to short a company that's coming from down here and really gets hit by this credit contraction rather than a company that's already down. Here, I just don't think there's as much room to go down, but I think there is definitely room to go down. And then I'll take a look out here. As we get out into June sometime, we should be ending this credit contraction cycle and going to an expansion. And that will be, how will that be for Boeing? I mean, that's going to be good for energy and tech and stuff like that. Things that are going to get pulled down in the contraction are going to bounce up like a rocket when it switches. But I don't think Boeing's going to shoot off. I think Boeing will go up a little bit. I think I I basically think Boeing is uninteresting. I think it has the potential to go down a little bit with the contractions. It has the potential to go up some with the expansion, like everything else. But I just think it's not going to make huge moves. Like, this was the huge move, and now it's just going to be a less interesting stock that doesn't have as much upside. And that's my look on Boeing. I don't see a ton of value in it right here. I mean, not right now, not with the outlook over the next couple years. And there's a lot more interesting stuff going on with oil tankers and gold and, like, I mean, Tesla is really interesting. GE is really interesting. Like, those companies are these top 10 stocks I've been talking about that look like they'll shoot off like a rocket when we switch. But right now, this credit contraction is a threat to everything. absolutely everything. Even gold pulls down when it contracts like this. Like the only stuff that stays up in a contraction is dollars, DXY. Um, I mean, there's some interesting ones like Fitbit was staying up, but it's going to get pulled down. Like the oil tankers have been up, like net up, like up from the beginning of the crash. They're up. They didn't crash, um, but they still pull down. They still do these moves when the credit contraction does the moves, and the move right now looks like it's down. So I'm just personally, I'm mostly cash, but the percentage of my portfolio I use for these kind of speculative moves is short. It's 100% short. I don't even like gold right now on the short, and I'm just waiting for the next up moves before I do anything interesting. But as long as we're in this cycle, it's dangerous, and going long anything is a very careful swing trade thing. There's absolutely nothing that I want to go long right now from the top of this spot where we are now. But even throughout the rest of the cycle, longs are just swing trades on these up moves. And this is where I'm going long on things. Is once we get to the end of this cycle, then I'll be looking to go long. And that's when most people will be like terrified and freaked out after this end of this cycle. They won't want to go long on anything. And then I'll be like, okay, go long on Tesla and stuff right now. And they'll be like, you're crazy because watch what happens. We'll see. We'll see what happens when we get there. But this credit contraction cycle is no joke, and Boeing is kind of a joke right now. And I would like to talk about this corporate bond thing a little bit more because um, the Fed, if they give someone a bailout, says like you can't do stock buybacks. They put restrictions on the companies. It's really bad for the companies. It just kind of holds them down and drags it out. This is not pumping the companies up. The thing that was pumping everything up was the stock buybacks, and they're not even allowed once you get a bailout. And the companies like Boeing now, is trying to stay alive, and they're getting private funding. Like Boeing is not going to be pumping their own stock up with stock buybacks right now. They're about to go bankrupt. They're about to go bankrupt, and they have this down move, and the Fed will bail them out if they go down far enough. The Fed's going to bail them out. They didn't need a bailout on this move. They may need one later in the cycle. And we have a month or more of this credit down cycle to go. Companies are going to be getting in trouble, going bankrupt. But it looks like the Fed's favorite new move and Trump's favorite new move is just to take a bunch of corporate bonds onto the Fed's balance sheet. And that makes enough liquidity in the private market for people to get private funding instead of a government bailout. And that is probably better for everybody because the private sector is actually going to do risk analysis when they're bailing a company out or giving them funding, unlike the federal government. And then the companies don't get all the restrictions that the government's going to put on them when they accept a bailout. So I think that is a better plan from the government's perspective. And it's a weird plan from the MMT perspective because you're saying like, okay, like now the Fed is really just going to buy all the corporate bonds. What else are they going to start just buying stocks? I mean, we don't know what the Fed's going to do. If this down cycle gets ugly, we'll see what happens. But this is the new MMT environment, and that's the new bailout plan: is to try to buy corporate bonds and create enough private liquidity to not need government bailouts, and that's what they've been doing so far. Um, and I think that is a little bit better than the direct bailouts because once the Fed puts that stuff on their balance sheet, it just never comes off of there, and it's just like a graveyard. And and this, I mean, well, they are taking the corporate bonds onto their balance sheet, so it's not that different, but they're not supposed to buy stocks, and they are trying not to buy stocks, and when it gets ugly, they will do that anyways. Also, and we're gonna see how ugly it gets here, and we're gonna see how ugly Boeing gets, and should be an interesting month or so coming up. It looks like we just turned over on this down leg, and this is mostly a down leg for the next month and a half to the end of the cycle. There's not a whole lot of up in here, just based on the cyclical model. You just kind of down, bounce. There's some bounces, and we're gonna get another up move, but it's an up move in pretty much in an ABC corrective down wave, and and we'll get some little, little dead cat ups, but we have little ups and a lot of down based on the cyclical model right now. Um, and that is Boeing and the Fed going crazy. I'm gonna pull up the corporate bond chart, and I'll do an episode about the corporate bonds specifically and look at what they look like, because they look absolutely nuts. That is the one thing that is actually getting just blown up by the Fed. And these kind of stocks here are not getting blown up by the Fed at all. People think that the Fed's pumping up the stock market, and they aren't. Like, the money that the Fed is pumping out is not going into these companies for stock buybacks. Stock buybacks have stopped. The Fed and the government are getting mad at companies for stock buybacks now. They're prohibiting stock buybacks for companies that take bailouts. The money is going directly to small businesses and individuals in this country. A tiny amount of the money, like a couple percent, most of the money is going into the Eurodollar international banking system and trying to keep international banks from failing. That's what this huge bump in the Fed balance sheet is the international banking system is failing. This is a huge monetary contraction. We're getting a huge amount of deflation across the entire world, and the Fed is just trying to fight against the deflation and keep the banks from going bust, like HSBC and Deutsche Bank and that kind of stuff. This is what's going on right now, and I won't get into the oil and the oil tankers and all of that. That's highly related to what's going on. But this crazy movements we're getting here is uh, this is the monetary system contraction, the worldwide monetary system, and this is the first big one and the first big bubble pop we've had in this system. I mean, the .com and the housing bubble were part of this system. And that was like the corporate backing of the dollar, and the mortgage-backed securities backing of the dollar kind of got blown up, and now oil, the huge backing of the dollar of the worldwide monetary system, is in a bunch of trouble. Um, I have I've digressed away from Boeing here, but this is the Boeing look and the world look and the monetary look, and not investment advice. Please hit the like button. I think that's about everything. Yeah, that's it. That was too much. Thanks for hanging out and talking about world monetary stuff with me. That was really great, guys. And feel free to chat and whatever in the comments about all this stuff. And if you have questions on any companies or stocks or whatever, like I go and I'll post a video about whatever you're asking about. So thank you and happy trading.